Alrighty, folks, you are in for a special treat, or at least something I hope you consider a special treat. We are going to do the weekly wrap up. This is something that Ty and I usually do together. It's recorded, but it is Christmas week and schedules are all a mess. So Ty and I said, you know what, Zoob, let's just do this live, get it out of the way, and go on with our day. So, Ty, let's rock and roll.
Happy Friday, everybody. Man, it's December 27th.
Yeah.
2024. I can't believe the new year is here.
Yeah,
but how was your Christmas? Tell us, how was Christmas in review?
Yeah, the holiday season, Christmas season is pretty awesome. I'm lucky enough that Christmas, my daughter still flies home every year. She's been doing that, since she left for college. She comes home for Christmas, so she's here with us. We're loving that, spending time, going out to eat. Just seeing this amazing human being. I'm just a happy guy. So Christmas is pretty special for me, but also, it's fun to watch the One Rental at a Time community, right? It's growing, it's merging, whether it's the 350 people in school or the thousands of people out there, or all of those. And then I don't know if you saw it. I actually did a daily financial news on Christmas Day, but it was a very unique one and something I've never done. I actually went through and thanked the 24 millionaires, which of course you're one of them, and highlighted something I learned from each of you. So it didn't get a lot of views, but it wasn't supposed to. It was supposed to be me thanking my millionaires who really made this channel. So, dude, Christmas was amazing. Holidays are amazing. I look forward to these each year.
I love it. Yeah, I would say too, for us, it was really fast. I would say
you've got little ones.
Yeah, and it's just wild. And, my wife is exhausted, and she's exhausted, just like done. And it's interesting that one of the things I will reflect is I'm getting older, is it, you see your loved ones, I see my aunts and uncles and people that are, you just never know. So to really appreciate the time you have with people, that was something I was very, very conscious of, to make sure to just spend as much time individually and connect with everyone.
Yeah. There's one thing I want to drop here that I think it was Cody Sanchez. It might've been Alex Tormosi, but I think it was Cody. She dropped this wisdom. And when we're talking about that extended family, your aunts, uncles, grandparents, if you're lucky enough to still have them, lots of us think, oh, we've got decades with them, right? They've got whatever. Cody, I think it was, said, what you should do is you should actually not think in years. You should think in how many times you're going to be with them, right? If you only see Aunt Mary on Christmas, it's not a decade. It's 10 more times. Yep. It's 8 more times. And that may raise the priority. It might make that connection better. It may force you to have a conversation with Aunt Mary now, instead of delaying it because you think you have a decade. So I thought that was a pretty interesting mind tweak.
Spot on. And, it's interesting. I was talking with my aunt, Karen, and specifically, she's just raised kids, had a daycare. And I'm asking her, coaching, and I'm talking about, with the boys and stuff. And then I just had this magical moment and got to share with her about something special when I was a little boy. And something my aunt and uncle did for me, and I got to share that with her. So, yeah, 100%, man, magical. But I got to tell you, Michael, I literally couldn't wait to do this interview with you, dude. The Crash Bros we always talk about.
Yeah,
I heard you called a 50% real estate market crash. What the heck is that all about? Please break it down for the viewer, for the listener, and for me.
It's really, really funny. You're right. I got a lot of flack for that, right? 50% real estate crash. Now, note, I'm going to use some specific vocabulary, which is how I could anchor on and be comfortable saying this. I did not say 50% housing crash, right? I said real estate, not housing. Just to nuance this thing. But really, this came from a conversation with Ulysses at Macro Edge, right? Macro Edge, he's the real estate analyst for Macro Edge. We talked about it yesterday. And he and I, he's more of a bear, and I would be put more in the bull camp. but it was shocking to have a detailed conversation with him. And this is already recorded. It went live yesterday. It was so valuable. He and I agreed on the pain points in the real estate market. So first, let's get the single family housing question out of the way. His bear case for housing in 2025 is negative 0.5%. That's his bear case. And his bull case is positive 1.5%. So a pretty tight area.
Yeah.
I told him, I'm right there. I'm 1 to 2%. So it was interesting to agree with what typically is a bear, or seen as a bear by the industry. And then we get into the conversation. We start talking about the commercial real estate market. We start talking about multifamily. We start talking Class A. We start blowing up syndicators who did stupid deals. And then we get into this conversation about Class A multifamily is starting to trade, right? Ken McElroy, Grant Cardone. That stuff has had a 20 to 25% haircut and is trading. And then we just had a great conversation about Class B being broken, frozen, no price discovery. The fact that a Class A might have gone from a 3.5 cap to a 6 cap means a Class B or Class C might go from a 4 cap to an 8 cap or higher. And when you just start breaking down the math, it means, and I'm going to be very, very specific, Class B and Class C multifamily properties could very likely see a 50% price reduction from the last sale. And you know what's really funny is I've been talking about this for 18 months.
Yep.
That specific part of the segment will be painful and ugly and nasty and opportunity. But now having that conversation with somebody who is looked at as a real estate bear, and then I call a 50% crash, people freaking lost their mind. I'm like, dude, I haven't changed my story at all. Single family, not crashing. You all are wrong. Multifamily, Class B, Class C. Math says it could be a 50% crash in values. And again, in the video, I talked about a building I bought and I still own that last sold at 1.44 that I picked up for 700. Folks, that is a 50% housing crash or a real estate crash. So it's really funny. My story didn't change. My title was maybe more clickbait-ish, but man, woo, that was wild to watch in the last 24 hours.
It's interesting too, because I had not sleepless, but just this whole week I've been looking a lot more at the 53-year chart and your spreadsheet. People can go to onerentalatatime.com. You can get that. It's some of the best work that, it's probably, to me, it's the best piece of research for what we do.
Yes.
For one rental at a time, mom and pop, single family investors. But even then, Michael, what I noticed, because I'm like, okay, this year sucked for me, like on the traditional retail business, like transactionally, making income, commission, wholesale fees was not, it was okay, but it was, compared to other years, was very, very transactionally just low. Mm-hmm. And I'm looking at that and I'm going, okay, what's going to happen next? And to your point about 50%, I'm looking at certain neighborhoods that could easily go from 800,000 to 725.
Sure.
And we could see haircuts like that, at 8 to 10% drop. And yet there might be other properties below the median that are 500,000 and 600,000 where I live and where I work that will probably hold steady. So you kind of net average those and you say, okay, and you kind of net average the whole entire market, the county. And like you said, the margin of, okay, is it micro? Are we talking, 50 bips, 1%, 2% in terms of net average over the year? But I think that some areas are going to be really soft. I think some markets are going to have 8 to 12%, and when you talk about writing disrespectful offers, I think that that's right in line. I can see certain properties definitely being soft of 8, 10, 12, even 15% based on the fact that it may be subpar in terms of the property condition, maybe a little outdated, maybe a little tired in appliances and landscaping, things like that. So,
Yeah, I want to be very specific on your example because this is something that is really messing with people's heads. Median price, right?
Yep.
Folks, if you understand median, it's the freaking middle. So I want to go back to your example. Currently today, the median is right around 440 for the country. Yep. In your example, you talked about an 800 house getting soft to 720, 10% drop. And then you talked about stuff, in your area below the median, below 600. And what we're seeing in today's market is the stuff at the entry level is not coming, but we're starting to see stuff above the median stack up. But even if that 800 had a haircut of 10%, that still yanks the median higher. And that is one of the reasons why the median home price over the last 2 years has really been distorted, because the housing market is broken. Single family entry-level housing, the move-up buyer is just not participating.
Right.
And until that unlocks, which could be years away in mass, I think the median home price is going to be artificially yanked higher.
Yep.
And I don't think enough people are talking about it. So, yeah.
Yeah. I would encourage the viewers, go to the website, onerentalatatime.com, and really take a look at it, and just even in bite-sized pieces, right? I'm not like a spreadsheet guy, but it's such a nice piece of work to really look back and see the patterns and see the numbers. Let's continue. So let's talk about, I've got in my show notes here, the 10-year note. Let me ask you too, let me tee it up for you. Why is the 10-year note so important? I think a lot of people know if they're a viewer or listener to this channel, but connect the dots with the 10-year note to the 30-year mortgage, Michael.
Yeah, well, the 10-year note, a lot of people hear the Fed is cutting and they think mortgage rates fall, right? Folks, the Fed controls the ultra front end of the curve. It's the overnight lending rate. You can't get any shorter than the overnight lending rate. That's all that they control. The 30-year mortgage, which is the cost of capital for real estate investors, has long since been, far closer to the 10-year mortgage plus a spread. Now, why the 10-year? Well, historically speaking, the average mortgage lasted 8 years. Right? You either sell or refi or whatever you do, right? Very, very few people just pay off their mortgage over 30 years, right? We refi or we sell. So that's why the 10-year has always been a good anchor for folks that supply mortgages. Now, typically on top of that, historically speaking, again, the margin for decades was 185 bips or basis points. Think about, if the 10 years 4, historically speaking, the mortgage would be 5.9 for easy math. Now, over the last couple of years, we've seen that spread widen. I think the most wide I saw was 309 bips, right? 309 basis points. Today, that's down to about 260. So we've whacked off about 50 basis points. So if you are just an average viewer, you're not a mortgage broker, you don't subscribe to Mortgage Business Daily or any of these services, the easiest thing to do is look at the 10-year note, go to CNBC or any financial institution. And if the 10-year note's up, mortgages are probably up. Now, they won't be 1-to-1. But again, if you're just the average folks and you want to know what's going on in mortgage, just watch the 10-year note. Now, the 10-year note, I've learned in the last 3 or 4 days that there's two resistance levels. And this is shout out Dan Bird, real, a stock guy, in chart guy. He told us we got to watch 4.7, right? That's a resistance level. As of this morning, I was just trying to check. I think we're at 4.63. So we're getting close to that. Yep. And then there's a big resistance level at 5%. And, if we happen to break those, which is absolutely possible, we could see mortgage rates, go over 7.5 and dare I say 8. Yeah. So it's everything. But let's go back to my big call. My big call for 2025 is mortgage rates will average 7%. And unfortunately, Ty, you're going to have another shit year. Yeah. It's just going to have another shit year. Yeah. I think 2025 from a normal broker, transaction level, I think, dude, this is going to really hurt. This might hurt some people. In 2024, it is estimated that we're going to do 4.04 million existing home sales, right? We're a couple of days from the end of the year, but that's looking like where the number will come.
Feels right.
4.04. we might do 3.8 million next year. So
25.
it might be down 5%, 7%. But the good news is, as I try to be encouraging, that will finally be the bottom. We will finally baseline out of there. And, we'll go from 3.8 to 4.1 and 4.1 to 4.2. But the good news is not many agents, mortgage brokers can survive 4 lean years, right? You guys have been starving for 4 years. And there's a lot of people who are not good business folks, and they're going to go broke. They're going to go bankrupt. They're going to go become Starbucks baristas or whatever they're going to become. So when we go from 3.8 to 4.1, that year is going to feel amazing because you have no competition.
Right.
So sorry to say you got one more bad year, and it's probably going to be the worst year yet, in my opinion. But it gets better from there. So 12 more months, bud.
Yeah. So, and it's interesting that you have called for plus or minus 7% rates. You called that months ago.
Yep.
And you were spot on. Even when the Fed was cutting.
Yep.
There was a lot of confusion on social media. People were, throwing parades and celebratory videos about, how this was finally going to be the time. And I don't think people really understand also that with mortgage-backed securities, where the government really played a big part of that, like they did in 2010, 11, 12, where they were buying back the bonds. Same thing again during COVID. Yeah. They were buying back the bonds.
Dude, they were not only buying back, they were the largest buyer. That's what people missed. I mean, they dominated the market. You want to know how you had 2.8% 30-year mortgage? Because the freaking government was buying them. It was a distorted and manufactured rate. If you're lucky enough to have a 2.8% mortgage rate, good for you.
I also want to note too, just history, because again, looking at the 10-year chart, Michael, looking at, I started in 94 as a broker, and those were lean years also. Those were, we were in the 4 million, plus or minus 4 million range. But as we progressed into the late 90s, 2000s, we got up to about, my best years were in those mid 4s to 5 million transactions. And because again, a lot of people left the industry and during the mid 90s. So this is a lot like, to me, feels a lot like the mid 90s as we progress. So I think for everybody, just be lean and mean, and really, we just have to work a little harder to get through the other side.
This is where doing the work wins. We may talk about it later, but we might as well now. 2025 is going to suck for a lot of people. If you are just that kind of individual that lets life happen, it's going to suck and be miserable. However, if you've been doing what we do here at One Rental at a Time, focus, stacking cash, daily discipline, you're not afraid to write a disrespectful offer 20, 25, 30, 35% below list price for, days on market 50 plus. You are the law of numbers say you're going to find an amazing deal. There will be people that find their best deals ever in 2025.
Yep.
If you do the work.
Do you think, I've heard a lot of people on CNBC talk about the 10 years going to 6?
That would be a problem.
Have you heard that?
I have.
Does that even resonate to you? It's like,
it's absolutely possible. I mean, if you would have asked me that months ago, I would have laughed at you. But let's be clear. We are heading into 6 months, Q1 and Q2 of next year, that lots of things could go wild. We just don't know what the Trump administration is going to do. We don't know what foreign leaders are going to do from other countries. It could get wild. It could get very inflationary. We could see early 1980s respike in inflation, right? We're kind of pissed off today because inflation's like 2.8%. It could go back to 5%, right? It could. Deregulations, tax cuts, tariffs, migration could. I'm not saying it will. I'm just saying we don't know. So, you can't laugh at 6%. I will say this. I hope it doesn't, because that will just destroy the economy.
And a 6% 10-year would basically mean mortgages are going to have 8 plus or minus.
It means owner ox will be in the 8s and investors will be in the 9s. Let's be clear. 8s for homeowners, and 9s for investor. Now, again, selfishly, dude, take cost of capital to 10%. I don't care. But I'm a very unique case who's got a bunch of cash and got a bunch of equity and can live with that. And I'm not afraid to write stupid offers. But a 9 or 10% cost of capital will destroy small businesses, will destroy commercial banks because of all the debt they have on their books. It would be horrible for a lot of folks, but the rich will get richer. I mean, I don't know how to say it any other way. I don't want to see that happen. I would not.
We don't want to see it. No, we're not predicting that. But if there was a black swan out there,
it could.
That could be the black swan, that something happens in banking and liquidity, and something like that Silicon Valley Bank thing that happened a couple years ago or 18 months ago.
I mean, the 54-year spreadsheet talks about it, right? Go back and look at the early 80s. We had Arthur Burns come in, take rates higher, beat inflation, declared it too early. Inflation came roaring back. It was worse the second time. Arthur Burns gets shit canned, and Paul Volcker comes in and goes, all right, time to send the country into a nasty, recession. That's what he did.
All right, let me clear the air.
Get that out of here, man.
I'm gonna light a candle, light some sage, say a couple prayers.
No kidding.
All right. Okay, reset. Okay. All right. Weekly unemployment claims. What happened this week, Michael?
Yeah, so weekly unemployment claims, again, it's kind of back to its baseline right around 220. I think it came in at 219. No urgency there. But I do want to remind folks that my call for 2025 is weekly unemployment claims becomes less important. It's continuing claims. I'm having PTSD to the early 80s. And I really do think I don't think the unemployment rate's going to go much north of 5%. Even in a bad case, but it's the continuing claims. This week, continuing claims hit 1.91 million. That is the highest in 3 years. My fear is it goes to 3 million, 3.2. So what we're going to have is the people that unfortunately get laid off. It's going to be hard to find a job, and we're going to see a duration, right? What's called U6. The continuing claims is going to be a problem, and it could really impact, other things than U3 and all of those things. So continuing claims, I think, is going to be the thing we should watch in 2025. It's not the unemployment rate. It's not weekly claims, other than watching for something breaking. We got to keep track of continuing claims.
Got it. Well, we'll just watch you.
Yeah.
So that's the
thanks.
There's my secret. Yeah, I always say my secret weapon, Michael Zuber. I love it.
There you go.
Let's talk about new home sales. What happened this week?
Yeah, so new home sales, again, I think this is going to be a theme for 2025. Expectation, or last month was like 630. Expectation was for growth to 675. Came in at 664. So up month on month, but not quite as much. I think there's only 2 winners in 2025. New home builders are going to be one of them. If they focus on finding a way to be profitable, making entry-level housing. My prediction for 2025 is the average square foot of a newly built home drops by 8%, 10%. So what you're going to see, a lot of the crash bros and all of the like are going to say is new home prices are falling, and they're going to forget to tell you that the average square foot fell by 200 feet or 225 feet. But yeah, I think new home builders are going to win because they can eat margin. And I think Lennar, I think it's the second or third largest home builder in the country, just told us what to expect. The CEO of Lennar in their earnings call, I think it was this week, might have been last, said, we are going to focus on pace over profit. AKA, we are going to eat margin and sell a lot of houses.
Interesting.
So I think new home builders are going to win, and then investors are going to win. First-time home buyers suck. Affordability sucks. It's just, I don't know how else to say it, but I think new home builders for entry-level win and investors win in 2025.
Very good. Anything on Lennar, the home builder Lennar, that you want?
No, it's just that realization that, one of the largest home builders is going to push pace over profit. And expect the same, even if they don't say it from Poll, from Toll Brothers, from KB Homes. The list goes on and on. I think you're going to see You're going to see home builders who had record margins a year ago eat a lot of margin this year.
Interesting. Very interesting times, man. Pace over profit. That's interesting. I've not heard that. So very interesting. Let's go back to 2024 existing home sales. Is there anything that, maybe that we've left uncovered?
No, this is really my message of both, get your mind right, get set for 2025. 2024 is going to put a number on the board at 4.04 million existing home sales, which when you adjust for population growth could be seen as the lowest of all time. It's just a shit year, right?
Yeah.
Like you talked about earlier, it's just like you're looking back going, wow, what the heck did I do this year? And you're a big producer, right? Think about the guy who does 2 or 3 homes. They probably did 0 this year. Yeah. I just don't know how else to say it. I think 2025 is going to be worse. It's just going to be worse on existing home sales. But again, the only way to build is get to the bottom. It's my belief that 25 is the bottom. Why do I feel that? Again, I think rates are over 7. I think affordability sucks. I don't think the move up buyer is broken. And again, you could see all of this data from 1978 to 1982. We're repeating that same nonsense. Yep. I don't know why people are like, well, how can you say 2025 is like 1980, you idiot? I'm like, look at the chart, moron, right? Get your head out of your ass. And, just go look at the spreadsheet. It's not the same numbers, but it's the same, it's the same trend. It rhymes. It's not the same thing. That's not what I'm saying. The reason my calls have been so right for the last 3 years is because I don't have an ego. I'm willing to go learn from history and, have been right so far.
Spot on. I think too, the opportunity, a couple things, like you said, I think that this is a shift. A lot of people are going to leave the industry. So what I'm talking about specifically, realtors, mortgage origination, there's a lot of people that got in over the last even 10 years who got in, say in 2014, 2015, that it was much easier. It was much easier. There was more transaction volume. Rates were better. We were coming out of the Great Recession. And so I think a lot of people leave the industry, but also too, what I would say, especially for our community, one rental at a time, is now, okay, we know that it's going to be a similar year, right? Stay lean and mean, keep your costs, keep your expenses low, manageable, number one. But number two, also, where are the opportunities, right? Like you said, writing better offers, being more aggressive. I can't say disrespectful offers because I represent a lot of sellers too. So, but I can say that for a buyer to be write an aggressive offer, right? To be more aggressive with your offers, right? Yeah. So I think there's a lot of opportunity. And then also too, for realtor investor hybrids, I believe now, we know where the opportunities are. I think there's going to be a big uptick in defaults. I feel like we're loaded up for that. That's going to be a big thing in 2025. A lot of defaults, probate, a lot of absentee owners leaving California because of all the regulation and red tape. So I think there's going to be a lot of opportunity for those that know where to go, where the puck is headed. But also, like you said, your theme, Michael, what your hat says, do the work.
Yeah, real estate investing is never easy, but it's always rewarding. It takes time. It's never as easy as we want. If I was a hybrid agent, 2025 is about, like you said, lean and mean, but also skill up. Yep. Because when we go from 3.8 to 4.1, there'll be less agents. But if you know how to handle a probate or a short sale or, a land, whatever it is, your 2026 is going, the more stuff you learn now in the last slow year will amplify how 26 is better. And then 27 is better. And then 28 is better. And one last thing about, the folks that are struggling now, not a lot of people can survive 3 lean years and they're holding on by their fingernails. That last washout, which comes this year, is why 26 will be better than 25, even though transactions won't meaningfully be better, just because you won't have any competition.
Amen. I love it. I love it. Well, Michael, as we wrap up here, Vegas, tell people about the event, February.
Yeah, February 15th and 16th, Vegas. We are less than 50 days away. I'm starting to buy more and more stuff, spend more and more money. it's the event you got to get to. It's in person, in real life. It's like nothing other, no other event. No selling, no back of the stage, no take out your credit card nonsense. You actually get to meet the people you see on the channel. Like you'll be there taking pictures and speaking. It's really a way. It's really a celebration. It's my way of taking all the goodness that's the millionaires around us, giving you guys love, giving you some shout outs, and then providing a way for people to come and learn and network and create new friends, right? If you're in a relationship, get your ass here. We're going to start day 1, day 2 with couples. If you're, haven't started yet, get your ass there. We're going to have people talking about, how they had no money, never made more than $10 an hour or got financially free. If you're stuck in a career that you hate, we're going to have a lawyer go on and talk about how she, pivoted after law school and many years in practice. We're going to have a session about the mind and the body. And it's just going to be a way for, me to give back. It's going to be a way for people to ask questions because again, every speaker will have half the time for Q&A. There'll be a line where you can line up and ask questions, right? You don't get this opportunity at any other events. People fly in, fly out. And then there'll be 6 hours of networking. I'm feeding everybody. Lunch and dinner day 1 and lunch day 2. And that's where the real friendships come. And there is nothing like a one rental at a time person, go-giver, doing the work. That's one thing I'm very proud of is we've attracted quality people who care and are willing to share and give back. And the takers and the deadbeats, they get washed out really, really quick.
Big time.
So
big time. This is the event. This is the event, folks. You want to get yourself there. This is, I would call it almost like the unconference because this is not like, back of the room table sales, every speakers pitching a product or service or the magic pill, like none of that. Like everything is wide open. Everybody shares everything. And then not only that, it's only set up. It's not like there's 1,000 people there. It's only set up for how many people, Michael?
I think we're going to have probably 250 to 300 people. So it's going to be very intimate.
Yeah, it's a beautiful facility. The food is actually really good too. The catering is amazing. The food's great. The service is great. Folks, get yourself to Vegas. It's President's Day weekend, February. This will sell out. So you want to go to Eventbrite, look up One Rental at a Time. Michael, tell them about the school community.
Yeah, I was really school community this week went over 350 folks. I think we're at 353 now. And the community is just starting to build on itself. We've got 5 amazing accountability groups. The ladies of ORaaT held a session during the holidays. Frank had a session on Christmas, right? The accountability groups. We bring on a different millionaire to interact with the school community every week. It's happening, Ty. It's like, I kind of consider school community kind of like Bigger Pockets 1.0. where it was just people who care and go give, kind of putting it out there. They've got like little topics. I think you can call them forums or whatever. But now we have calendar. We have free education at different levels, little gamification. You gave something, Jason gave something, I gave something, right? So there's thousands and thousands of dollars in education you can go get just by interacting, right?
Yeah.
And then it comes down to 67 cents a day. I really love that price because it's just enough to keep the trolls away.
Yeah.
And it's low enough that anybody could afford it. So yeah, I think in a year, maybe 2 years, school is what I'm known for. Right now, it's probably my best-selling book or my YouTube channel. Yep. I think in a year or maybe 2, it'll be, hey, the One Rental at a Time school community is like nothing else. So that's my hope is it becomes the place that I'm known for and frankly outlives me because, we've got 5 accountability groups now that I don't participate in. It's just other go-givers doing it. I do want to call out I'm looking for 2 more, right? Might as well round out the week. I would love for 1 person or 2 people to own short-term and medium-term rentals. Again, something I have 0 experience in. And then the other one is out-of-state investing. Again, something I have 0 experience in. So I would love go-givers who are willing to own an hour or so every week to get in school, and let's just keep helping more and more people. And I can't help with short-term or mid-term rentals. I can't help with out-of-state investing, but I know there's some go-givers out there that might want to, do that. So, I look forward to that.
I love it. Michael, what an awesome dude. So grateful to have, what a great year, 2024. We learned a lot, right? We're prepared for 2025. Man, thank you for all that you do. Have a great weekend, brother. Thank you so much.
Take care. Later. This was fun, Live Ty.